And here in Hong Kong, IPO fever continues with 5 companies listing today. There was also 2 ETFs. It was a full house down at the Hong Kong Stock Exchange today. And we want to look at some of the market action. Amongst the 5 that were listed, 2 of them were A shares coming into the Hong Kong market. And we want to pull up shares of Fortier Technology. This is a chip designer, and the stock was priced at $120.50 and is popping 8.7% at 131 last traded. If we want to have if we have the Shanghai listed shares, let's just do a comparison because we have seen recently when Contemporary Amprex came online that the Hong Kong listed shares trade at a premium to the A share counterparts, and Fortier Technology on the mainland traded at 183, so not quite. This, of course, the A share is more expensive than the Hong Kong listed shares. Let's get that Lens Technology. This is an Apple supplier listed in Shenzhen as well. It was priced at a 30% discount to its Shenzhen listed shares. So priced at $18.18, up 2.2%, $18.60 last traded. And just out of curiosity, we want to compare with the Shenzhen listed shares, and it's looking like this. $22.77, so we still do have the premium in the A share listed stock. Also, Wuhan Dazhong Dental Medical. This is China's largest dental provider for central China by revenue, and it priced at $20 per share, and the best performer amongst the bunch today. It has come off the day's highs, but sitting up 15% at $23.15 against its issue price of $20. We have been really watching this IPO activity. Of course, we got a chance to speak to KPMG just yesterday about what they expect for the full year. We're already number 1 as it stands in the first half of this year. 42 IPOs listed, $13.6 billion raised. Here's the forecast from KPMG.
We do expect between 100 to 130 company overall that will list, and raising a total of 200 and 250 billion. So we already had 107 billion. So we believe that we should be able to double that in the second half. And given the strong pipeline, as I mentioned, with 200 companies already in the pipeline, and then the accelerated approval process for A-share company in the application, many of those should be able to complete their IPO by the end of this year.
And one of those companies could be the likes of Shein. The market was watching this as we had some reports about it filing for a confidential listing application at the Hong Kong Stock Exchange, so it got quite a number of people excited. So this confidential listing usually is reserved for companies that are already listed. Here in Hong Kong, the Hong Kong Exchange has expanded that to include tech companies. So whether or not Shein is considered a tech company, that raises some question marks in my head. But once the approval is near certain, then we can expect for the company to publish to the Hong Kong Stock Exchange its listing documents, including its prospectus as well as its application proof. So this is something that we've been watching in recent weeks about this listing in Hong Kong. We know that they filed over in London, and it really is between the regulators in London and the regulators in China. The differentials when it comes to the language being used in the risk disclosure section of their prospectus. The FCA approved, the CSRC did not, so we're still waiting for that to come through. Whether or not the Hong Kong listing will come through, of course, we'll continue to watch that.